Welcome everybody to this edition of the Investment Update. My name's Marc Grigg. I'm joined here with Greg Smith, our investment specialist. So Greg, there's a lot for investors to digest at the moment, especially what's going on globally, and there's a lot of attention in the US. What's some of the key takeaways?
Yeah, certainly has been a lot of attention on the US. If you look at the S&P 500, continue to make record highs during the month. And there's a few aspects to that. If you look at the earnings season, that finished off really strongly.
Yeah.
I suppose in terms of individual results, it's pretty hard to go past Oracle. So that stock was up 35% in one day. You've got the AI thematic. Their revenues were growing at 1,500%. They're saying cloud revenues are going to go to 144 billion US dollars over the next 5 years. So that really took the market by surprise.
Yeah.
A good outcome from us in terms of Oracle being held in the thematic fund. Obviously the Fed was very much the focus as well. So they put through their first rate cut in 2025. Obviously they've been getting a lot of pressure from a certain person in the White House to cut rates, and Jerome Powell has, but yeah, they decided the timing was right, and they've also been pivoting a bit towards away from inflation, which they feel is under control for now, towards supporting the jobs market. And towards the end of the month, I think it was interesting the data that you got out, which showed how strong the US economy is in terms of GDP, durable goods, housing market data, and even that around the jobs market. So that actually caused a few concerns about, is the Fed still going to be cutting over the coming months? But then we had quite a benign personal consumption expenditures index gauge read, and that's the Fed's preferred inflation measure. So that calmed the nerves as well. So S&P 500 up 3.5% for the month, up 14% year to date. So that was certainly the highlight.
Wow. And there's been a lot going on back at home here in New Zealand and across the ditch as well. A couple of things like, what are some of the key points there? And the other one, there's a lot of noise at the moment in regards to the new Reserve Bank Governor, Dr. Anna Breman as well. What are your thoughts on that?
Yeah, that's a great point. So you look in the Kiwi market, that was up 2.8% for the month, up 5.5% for the quarter. So we're actually not too far away now from those record highs of January 2021. And the interesting thing about that is that this is despite the fact their economy is in a pretty tough place. So we had that GDP read for the June quarter, economy contracted 0.9%. That was way worse than what most economists, the RBNZ, were expecting. But yeah, the market, it looks through that. And part of the reason there, you mentioned the RBNZ, is that it solidified the case for more rate cuts by our central bank. And what that means is then hopefully some tailwinds coming through to the economy, and perhaps a better finish to 2025 and into early 2026. So the market's pricing that in. Now you mentioned we have got a new governor, so that was pretty exciting. So first female, first foreigner since the 1930s. I suppose the interesting thing here, and she's extremely well qualified, it might be a bit about restoring stability as a central bank, given what we've seen this year. I think by the time she takes over, so December 1st is actually when she takes over at the helm. Her first live meeting isn't actually going to be till February next year. So I think the focus won't be so much around rate cutting potentially, but they'll certainly be looking at other initiatives like Reserve Bank requirements. So I think that's really interesting. And of course, New Zealand obviously had a lot going on. Australia did as well, and their economy is going a bit better than ours, and also they came with a pretty hot inflation print, and their central bank is more sort of almost looks like it's in pause mode now. So there's questions whether we get those rate cuts coming through, if at all, from them. I think the interesting point as well about that was that it's had implications for the currency. So you look at the Kiwi dollar. We're fetching just 88 Aussie cents at the moment. That has implications for our exporters and also for New Zealand businesses with operations in Australia. And just finally on that point, not all doom and gloom, is it? Because the dairy sector is going pretty well. We had a super strong result from Fonterra during the month as well. So high milk payout, high dividend, and then pending sale of the consumer business. That's going to put billions of dollars in farmers' pockets, and not just that, perhaps some trickle down effects. So that's potentially some good news as we sort of close out the year.
Excellent. And so we're in the third quarter of the year. In regards to sort of like stocks, what are your sort of thoughts on that? Have we seen sort of any winners or any losers in that space?
Oh, it's really interesting, and obviously our funds overall have had a really good year, but there's some clear highlights. If you look at the US, we talked about the tech sector, so Cloudflare, that's a web infrastructure and security company. They've got some really cool AI tools. They had a great result. They're growing really strongly. They had their biggest contract to date. They won this year. That stock's doubled, so that's a pretty good outcome for our funds. Then you look at Broadcom, which is actually $1 trillion company in its own right in terms of market cap. Came from a very strong result. They're growing revenues at around about 60%. They had a $10 billion contract announced, it's believed to be with OpenAI. So that stock's up around about 40%.
Wow.
And then another name which will be familiar to many, Netflix.
Yes.
That stock's up 30%. So what have they done? They're continuing to get subscribers. They're rolling out content. They're getting into live sport. But a lot of their initiatives are really working. So people used to share passwords a lot. They don't do that now. They don't do it as much.
Unfortunately.
They're clamping down on that. And also the ad-supported tier. So, obviously, consumers are in a tough spot. They're cutting back on things. You can now pay a little bit less for your subscription service, and the ad-supported tier is going really well. And it's in terms of growth there. So that's been a good stock. Look, it hasn't been all winners, and just getting some balance here. There are some stocks that haven't worked out, and I suppose one of note would be Eli Lilly. And this is a pharmaceutical name, and there's a few reasons I think why it hasn't worked out thus far. I suppose there's been some policy headwinds coming from the White House. There's been some sector rotation. There's probably also been a little bit of fading optimism around obesity drugs, but they've got the launch of their new oral GLP-1.
Okay.
And we see that as a really convenient, great treatment that's coming through and could really boost their obesity stable and earnings. So that's some names offshore, and bringing it back home, hard to go past A2 Milk. We talked the dairy and the milk sector before, doing so well in China. They're taking market share over there. They had a great earnings result, and they've got a $300 million special dividend. They got a lot of cash, but the share price performance there has been really great for our Australasian funds. It's up around about 60% year to date.
Well, excellent. And I've seen the investment team doing a little bit of travel around, obviously going out seeing companies. What have sort of been some of the key takeaways from that? Yeah,
we do plenty of travelling around, and that investment team do in terms of seeing companies and other companies that are relevant directly to the portfolios and those that are sort of outside and looking for new opportunities and the like. But a couple of really interesting conferences that were attended last week. And particularly in the US, a major technology conference, and also the team got around and saw a lot of technology names. Obviously, the tech sector has led things higher this year. Perhaps not surprisingly, lots of optimism still around AI, but a bit of a sub-theme emerging in that data center companies are looking more at energy efficiency. And it's well known about the energy requirements of ChatGPT and the like, and what this is all going to mean. So they're starting to look at that, and this is really important because even a 1% improvement in energy efficiency in these big data centers could have a meaningful impact on earnings. And then back to something a bit more old-fashioned, there's quite a big financials conference as well in the US, and the theme there was everything's pretty good, which is interesting in terms of banks are saying, look, deposit growth's good, lending's good. We're not seeing impairments or credit stress yet. No alarm bells. And whilst you might think, they're just talking their book, that does actually square with the economic data that we're seeing in the US. So it's all pretty resilient.
Excellent, excellent. So sort of moving into, looking forward, moving to the final quarter of the year, sort of what do you think investors should be looking for?
Yeah, I think there's lots to sort of occupy investors' minds as we look ahead. I think it's going to be, once again, we get earnings every quarter, particularly in the US, so they're going to be really in focus as a steer on the economy for those economy-facing stocks. Obviously, the tech sector is that narrative continuing, and also tariffs. What's happening? Are they having an impact yet or not? Are they expected to have an impact? There's still a little bit of uncertainty there. The Fed's going to be in focus. Markets expecting 2 more rate cuts by the US Central Bank. That's not guaranteed. They've said that in data-dependent mode, so we have to see how all that plays out. I think it's also going to be interesting to watch the US dollar, and it's sort of an interrelated theme there with the questions over the White House trying to interfere with the Fed's independence, if you like. So I think that'll be interesting. But yeah, we'll be expecting some rate cuts from the Fed. The trade developments, we've had all these deals, haven't we? But we haven't had the big kahuna, US and China. So the clock's ticking down there. That's going to be very relevant, that outcome, particularly to New Zealand and Australia. China's our biggest customer. Back home here, as I mentioned, our economies are moving at slightly different lockstep when you look at Australia and New Zealand, as are our central banks. So I think it's going to be really interesting to watch the data coming out of both to see where that trend and continues and maybe perhaps improves in the case of New Zealand, and whether we get some of those green shoots or more of them coming through towards the end of the year. So I think a lot to occupy investors' thoughts as we go into the final quarter.
Excellent. Well, thank you, Greg. And join us next time for the next investment update.